Mortgage rates improved this week. In general, the major economic reports that came out last week didn't end up shaking things up because the data came in generally lower than we expected, and we had no surprises from the Fed. Now, a few weeks ago, mortgage rates got a little bit higher. I'm sure you saw it because January's jobs report that tells us how many new jobs were created in the month surprised everyone with how high it was. Last week, we saw the report was updated to a corrected number of 229,000 new jobs created in January, not the 353,000 jobs that was first reported. That change really helped to calm some investors' concerns, and so we saw mortgage rates drop back down some this last week. Now, the unemployment rate did go up to 3.9%, its highest reading since January of 2022. Now, for some context, though, the unemployment rate in April 2023 was 3.4%, which was the lowest since 1953. So we aren't too far off from our lowest point in over 70 years, literally 70 years. One of the big questions we're still asking is when the Fed will make their first cut to the Fed funds rate. Now, most experts are looking for that first cut in June, and the Fed chair, Jerome Powell, is still saying that the Fed is watching the economic data very, very closely and weighing the risks so that they make their cut at the right time. Remember, their rate cuts don't directly impact mortgage interest rates, but they do affect the market. So what's coming up? The Fed has their next meeting on March 20th, and no surprise, everyone is keeping a close eye on the Fed to give us a closer look at their plans for monetary policy, which will hopefully give us a better idea of when that Fed funds rate will come. Again, remember that does impact the market. The Consumer Price Index, or the CPI, will be out on Tuesday of this week. CPI shows us the prices of goods and services in the United States and is one of the most watched reports to give us an indication of where inflation is and where it might be headed. Now, we're also going to get the U.S. retail sales report on Thursday. This one is important largely because consumer spending makes up over 2/3 of U.S. economic activity and spending across the board. So it really gives us a sense of the health of our economy. For us, these are important reports because they typically play a big role in the direction of mortgage interest rates. So we'll keep you posted as always. Now, if we've spoken to you about the refinance, the good news is on the interest rate front this week, we're stepping closer to a lower rate environment for you so that you can take advantage of some of the savings. Now, we're currently sitting in the high sixes, but again, we're seeing the lowest rates in over a month. So we are excited for that. We're seeing that trend down. If you've talked to us about a refinance already, we are continuing to watch the market for you. If you haven't talked to us about a refinance, if we haven't spoken in the last 6 months, it is a great time to talk right now before we see rates drop and the market is inundated. So we're having conversations with all of our clients right now just to ensure you're prepared when we see rates drop. So reach out and let us know how we can help. Have a great day.